welcome to our discussion on cost accounting, its application, and today we are going to concentrate on and start understanding on one of the important tools and developed concept called activity-based costing. Today we'll just see that. I'll make a brief introduction to that concept. But before we get into that, maybe there is a need to ask a question. Why do you need a cost system? Maybe a statutory requirement. I'll put that under the statutory requirement. So as a statutory requirement, you can say that I need information of cost for the valuation purposes of the stock, which will be shown in the income statement. So that is more a statutory requirement. So for that I need the cost information. But other than that, there may be non-statutory requirements, which is like estimating the products, cost of products, cost of services, cost of the customers, to take some managerial decisions. This may not be required as per the law for financial reporting, but for the purpose of management we may need that information. Sometimes I need cost information to provide feedback to the managers. So the last two, that is these two, I would like to put them as a non-statutory. The first one is a statutory. So when I do a statutory comply with the statutory requirement, I'm bound to follow the generally accepted accounting principle. But for non-statutory, I don't have to comply with the GAAP. So this I would say non-GAAP information. So in that situation, how to make cost information more relevant and also or without compromising the rigor. In a conventional costing, I say that total cost, there are several ways, but total cost can be computed as a material, labor, or plus the overheads. Okay, just add them together. And we know that material and labor may not be a problem, but the problem may be with respect to the overheads. When the overheads are allocated, apportioned, and absorbed over the products on the basis of the volume of labor, volume of the machine hours, or the units produced. So the overheads are generally absorbed on the volume based cost drivers. But often a question arises, is the volume alone the cost driver? If not, will this not distort the costing information? So that is a matter of serious concern, that if the costing is not properly done, then the managerial decisions will get distorted. So as a result, we are making a conjecture here, will activity based costing provide an alternative? Okay, so let us see what is this activity based costing and how it differs. In a conventional costing, I say that the expenses are allocated, absorbed, apportioned over the cost objects. So there is a direct link between expenses and the objects. What are these expenses? Salaries, depreciation, interest, etc., etc. But in activity based costing, we say that the expenses are not directly consumed by the objects, so that the resources are required by the activities, and activities consume the resources, and the products consume these activities. So therefore the focus shifts from the expenses to the activities. So in activity based costing, we say that the cost of a product is not the summation of the expenses, but the cost of the product is the sum of all the costs of activities required to manufacture or the product or deliver the product. Products do not consume the cost directly. Money is spent on the activities, so activities are consumed by the products, so therefore the cost depends on the activities. Therefore managing cost should not be seen as a managing expenses, but rather spend time on managing the activities. That is the contribution. So in activity-based costing actually assigns the cost of the products by tracing the expenses to the activities. Each product is charged based on the extent to which the activities are used by that product. So that is the underlying. So the primary objective of ABC is to assign the cost that reflect or mirror the physical dynamics of the business. In other words, the business complexity is captured by the activity based costing. That's what it says. Maybe we'll observe through some examples as we move along, if not in this session, in one of our future sessions. So activity based costing addresses some questions. What activities are being performed by the organizational resources? How much that is cost to perform those activities? You can see the questions are itself changing. Why does the organization need to perform those activities? And how much each activity is required for the organization's product? So therefore, in each question, there is a focus is not on expenses, but the focus is on the activity. So there's a paradigm shift that instead of focusing attention on the expenses, we focus attention on the activities. Will this contribute in a big way to the cost management? We have to see that. So what are the steps there? It says, I'll just rush through now. It says establish the cost pools, identify the activities, map the resources to the activities, define the activity drivers, and then calculate the cost. In most of the ERPs today, you have an embedded activity-based costing system. So you don't have to do these step by step. The ERP itself will do that. Identify the activities. So therefore, one of the first important activities under implementing is actually to define or create an activity dictionary, and the list can be anything depending on the organization. Then map the resources or the cost to the activities. For example, financial accounting categorizes expenses like salaries, fringe benefits, utilities, communication, and this is what you see in annual report. Whereas ABC collects those information on the basis of the activities rather than on this. Let us take an example to show that. For example, this is information from financial accounting, and so the total 725,000. So this you see in the income statement. But in an activity-based costing, I'll try to map those expenses, salary, depreciation, electricity over the activities. The total is same, but the way I see that expenses is not on the basis of expenses alone, but also on the basis of the activities. So if I want to know out of 725,000, how much is spent on purchasing material, I can see that, which is not visible in case of ordinary normal accounting. So in a normal accounting system, what is generally done is we calculate one what you call an absorption rates based dividing this by output or labor, so you get one single absorption rate, whereas in this case you get multiple absorption rate. So in activity based costing, you're shifting from a single absorption rate to a multiple absorption rate. So what's the benefit of benefit of multiple absorption rate over single absorption rate? It will improve maybe the cost information. It will help the managerial decisions. Now let us see what happens if under what situations you actually provide the use of this activity-based costing. You want to find out where are these activities incurred every time a unit is produced, or every time a batch is produced, every time a support production system is created, or maybe at a macro level. So therefore, it is necessary to see different types of activities. But where is this activity-based costing is used? Um, in my understanding, wherever there's a huge overhead, significant overhead, where there's a product diversity or a multiple product, multiple customer, that's customer diversity, or service diversity, or there's a stiff competition, in that case, a single absorption rate based, volume based cost accumulation and cost management may often distort the costing, as a result, distort the managerial decision. Maybe activity based costing, because it shifts the focus from expenses to to the activity, it enriches the understanding of the cost information. With this introduction, I'll close the session, but in later on, we'll take some examples to drive in the importance of ABC over the conventional cost management.